we don't like to call my younger advisors junior advisors. I like to call them associate advisors. Why? Because if I'm Mr. Important Client, do you want to deal me off to a junior? I don't think so.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that...
Okay, welcome to this episode of the Bull of Wall Street, and I'm excited because I've got my good buddy Ken Van Leeuwen on this episode. And as you know, many people that watch this or listen to it know, we usually have people that are talking about the markets, the economy, chief economists, investment strategists, maybe principals of asset management firms and things like that. But, you know, this podcast is for financial advisors, and Ken happens to be now, after our first full season, only the second advisor that is going to be gracing our show. So thank you very much, Ken, for participating.
Thank you, Jimmy. Thanks for having me. I appreciate it. It's an honor to be number two. Kind of like Davis.
There you go. Our mutual friend Ann Tran was on last year as our first advisor, but
she's a good choice to be number one.
Yeah, she's good. But you know, as I've gotten to know Ken even better over the last 12 months, he's good friends with our new president, Andy Cowball. Andy was divisional president with LPL for many years, and they've developed a relationship there. You know, I've learned that through talking about his business a little bit and getting prepared for this podcast, our businesses look fairly similar. From my perspective, as an advisor myself for a long time, as Ken's been in this business for a very long time. So I hope that what we can cover, Ken, today is a lot about your business, how you got here. I mean, you're an extremely, extremely successful advisor. I know that you've been, consistently a Forbes Shook Best in State advisor yourself, and then your team recently just got awarded as a Forbes Shook Best Wealth Management Team as well, I believe.
Yes,
and you got many, many, many accolades. I mean, when I met Ken was at some of the top conferences that LPL used to host, as we both have used them as our broker-dealer and custody partner for many years. And so I would like to ask you, which I think you have a very interesting background, about your journey to get you to where you're at today. We're going to cover a lot of things from how he got started in the business through today, which was actually through a succession strategy that he's implemented now. Actually with LPL. But that being said, can you share with us, please, about how you got started and your journey to here?
Well, thanks, Jimmy. Again, thanks for having me on. Basically, the story goes way back, close to almost 40 years now. I mean, in 1987, 1988, a colleague of mine actually at Smith Barney and I, we were institutional salesmen. So we were covering big pension plans, etc. We wanted to be in business on our own. So we chose to become financial advisors. And we met another gentleman who was frankly with Cigna at the time, and that's going to be important in a minute when we talk about that. And we teamed up with him in Princeton, New Jersey, and that began my career as a fee-based financial advisor, financial planner. In 1997 or 1995, we then started custodying our assets, and we moved over to LPL at the time. Actually, it was, as it was called, Linsco Private Ledger, because for all the people listening on this podcast and video, they had this thing called a SAM account where you could actually manage assets for a fee. And we found that very, very beneficial for a lot of reasons, for clients and frankly for our businesses. So that's why we moved over, and I've been with LPL ever since to the current day.
Well, that's quite a journey, and I know LPL was a pioneer, right, with that. I got into business in 1995, and like you, I started with when I say like you, what was similar was that I started doing financial planning from day one. It was a company owned, I was with an insurance company, broker dealer, but it was a company owned software that basically did needs analysis, which was financial planning. And I learned how to work with people that way to do, really in-depth fact finders, learn how to do all the nitty gritty of the financial plans themselves, and then to make recommendations from that. So we have similar backgrounds on how we started. I think we're fortunate, Ken, because I know a lot of people in the industry started out in different environments that were very transactional, not as much relationship based, right, and needs based. And so I feel fortunate that I got that training up front as well. Can you tell us a little bit about your team, how it's made up today? Ken's team manages close to $600 million in assets. So he's a very successful advisor, was a sole shareholder. So it wasn't like a conglomerate of different people that just came together. So can you tell us about what your team looks like today?
Sure. And it's important if I do it under this construct, Jimmy, we practice what we call the entrepreneurial operating system, or EOS, for some people who know. Also, EOS is based on this book called Traction by Gino Wickman. First of all, that's a takeaway for everybody listening and watching. That's a definite book, in my opinion, for financial advisors or any people in business to read. But in my team, I am what they call the visionary. So I have the vision for the practice, where we want to go, where our goals are, what we want to specialize in, what strategies we're going to be implementing. And then a key person on my team is Judy DeFazio, and she's the integrator. She is the integrator who basically brings the whole team together and takes the wisdom that I give to her, or the vision rather, and implements it amongst the team. Then I have a leadership team. I have four advisors, including myself. We manage all of our assets in-house, pretty much. We're starting to do some third-party managers now, and I'll talk about that a little bit later on. But we do all of manage our assets in-house. So I have a CFA, and I have a CFA in training, who run the investment portfolios. I have a trader, a dedicated trader. I also have a research analyst, and then I have a person who does the trading. I also have a person who's responsible. She does compliance. She does our financial planning, runs all our analysis. So we have quite a robust team, and then I occasionally bring some freelance people in as well to help Van Leeuwen and Company. But I try to, from that perspective, keep my team as lean as possible. So the team is robust, but we do a lot, and I'll explain that a little bit as we go along.
That's great. And so let me back up. I should have introduced you a little bit better, but Ken is the managing director of Van Leeuwen and Company. They have offices in New Jersey and in Florida. Ken's in Palm Beach today in very cold weather. Very unusual.
Historically cold.
I was actually there last week myself, and we were able to enjoy dinner together on a little bit warmer day. But anyways, so Ken's built an incredible business, as you guys have just heard. I think his team is well built out. I mean, 4 advisors and the rest of the team that you mentioned. We also used EOS for a while, and as a firm, and we love a lot of the great concepts out of there. So that's a similar background as well. And so for those of you that are very entrepreneurial, like Ken has been his entire career, that's another process and system that we think is great. And I want to ask you now about your process, because I know that, you said you started your career with Cigna and you wanted to talk about that, and that was instrumental in how you started building your business. But I know that, one of the core tenets of your business is to do, very comprehensive financial planning. And I went on your website, I looked at some of the things that you talk about on there, and you talk about a vision for somebody's life plan, I think. And so if you can talk about your process for planning, and I thought that was pretty cool. Also the Rembrandt Society membership, and I saw that as well, and I can kind of see what that looks like. But let me start by saying this. Um, I think the best financial advisors look at the financial planning process as a separate service, and they've always charged their clients separately for that service instead of just a freebie giveaway. And a lot of times as maybe a kind of a way to try to make a sale, right, for the investment account. And so Ken's done it very differently his entire career, it sounds like. And I think part of that's been the foundational part of how you started this business with Cigna. But can you tell us about that?
Sure. And just to clarify, Jimmy, when my colleague and I left Smith Barney, we joined a person who was a Cigna advisor at one point. And then he left and we wound up associating. This is way back for people on this call. The broker dealer at the time was Integrated Resources. So for a lot of people, that's a head scratcher, but that's a long time ago. But one of the key things is that this gentleman taught us was really to do comprehensive planning and to charge substantially for it. So back in the day, and this is in the late 80s, early 90s, we were charging a minimum of $5,000. And we don't call it financial planning. We like to call it a bunch of different things because one time I was in Costco and there was a person there and he had a card table and he said he did financial planning and he gave you a folder, and that blew my mind that was my competition, for lack
Wow.
of a word. Um, Not that anything wrong with Costco. We're going to Costco. Believe me, I go often. But the perspective of that just was that I wanted to be thought of as something different. So that has evolved along the way. At one time, one of our clients actually we called it developing your life roadmap. Like, where do you want to go in your life? We changed that a little bit now, and we patented or trademarked it. It's called building your life vision, um, because we want to take clients from their beginning or when they're beginning with work with us, frankly, to the end of their lives. So how did they think about their lives? You had to do it through the planning process. It wasn't just about managing some of their assets or helping them with an insurance policy or college funding or something like that. It had to be wrapped up into one package. And we decided, because we do have a line at Van Leeuwen, and we do stick with this too, we don't have to manage your assets to work with you. That is, we also think, very unique in this business because if they are willing to pay us a planning fee, we're very happy to work with them to help them build that. Because we also think, some of my clients have some very sophisticated money managers, hedge fund managers, other places where they manage their assets. Who am I to disrupt a really good relationship in terms of that's being successful for them? So that's really important to us as well, right? So really, it's from the beginning till their end that we want to look with them, and then everything that it involves, whether it's they're planning for their work life, planning for their quote unquote after work life for retirement. What does their older years look like? What are their philanthropic goals? What are their estate planning goals? How do they want to involve their families in their life vision? Because that's very important too for many of our clients. You know, they want their money, to do good while they're alive for their families, but they also want to make sure it passes effectively to the future generations. So that's a very, very intense conversation over the years, and with some of them on an annual basis or quarterly, as a matter of fact. So that's just really why we believe in the planning process, Jim. And it's important for us. Financial planning is not a product, right? It's a way of life. I mean, most of our clients, 90% of our clients do financial planning with us. So that's how we like to do it. And actually, we require, in most cases, to do it that way.
And for those of you, I mean, amongst the plus thousand or so advisors, independent advisors that are affiliated with LPL, Ken always ranks in the top 1, 2, or 3 in fees. And so to give you the kind of scope of the level of planning that he's doing and charging for and not giving it away, as you heard him talk about. So I think that's very cool. I think it's a best practice, in my opinion, to make sure clients appreciate that, because a lot of times they skip it. And then when advisors ignore that, I think we don't give our, when you're getting paid for it specifically, sometimes you don't do as good of a job, right? So, you know, just speaking frankly with you, Ken, I think a lot of advisors have used cash flow analysis or some sort of what they would call financial planning up front to capture the client, but then kind of not do a very good job afterwards. That's been my experience working as an OSJ, just, working with other advisors that don't pay enough attention to it. And as we all know, as advisors, the more wealth somebody has, their life doesn't get simpler, right? So it requires more planning. And so I think that's amazing. The other thing I learned about your process, besides the financial planning part, that I thought it was unique, and how you market it. So you don't like to call it planning and calling it something different, which you've trademarked, which is awesome in this Rembrandt Society. But it's also how you work with your clients. I know that you said that all clients get 2 advisors in a meeting, which some advisors would say, that's not the best use of time because you're not getting as much leverage. But, I think for a lot of advisors that are trying to figure out how to make their business more sustainable, that's certainly one strategy. Was that part of why you did that? Meaning, or was it more about just having more of a team approach, more of an ensemble practice? Can you talk about that? Because I know a lot of advisors think about that differently.
Sure. And how I actually came to that, Jimmy, I always take things from other people and other professions, right? I remember when my dad had open heart surgery, he dealt with a very famous physician in New York. Um, but that gentleman was clearly the wisdom, clearly the man who people went to get, to do the surgery. But it was really his PA who was the doc involved and who handled the relationship with my father and my family. Uh, I mean, right, and with us. And I was like, wow, here he is. This is the wisdom guy. Then he's got the guy who's the implementer. So one of the things why we do that in our practice is that, again, as we all can tell, I've been doing this for a while. So I want to be the wisdom guy, right? I want to be working with the clients when there's particular needs or strategies or depending upon their total assets. But then I want that associate, and I don't call them junior. That's a whole other story. I like to call them associate advisors. My associate handles all the day to day, the follow up, the paperwork, all that of that nature, because I feel that that's also not the best use of my time. And I also want to be considered that wisdom guy, right? Because that's how we can best build our business is let me go do other things, be that vision for Van Leeuwen and Company, rather worrying about, and not that it's not important, Mrs. Smith's check, if you know what I mean. So I think that's super important how we do that. And it does make us, the criticism is that, well, you have 2 advisors, but again, we're trying to work with a certain level clientele. We tend to think a more affluent client, so we think they deserve that and deserve that service.
No, I listened to another podcast on Kitsis where there was a high producing group team ensemble practice like you've built, and they did the same thing. To me, it's a great strategy to also make sure that the client understands that there's more than one person involved. Even if you're the wisdom person, I'm sure that you've had conversations like I've had, sort of something happened to you, like nothing's going to really change because the other person knows what's going on. They've been in all the conversations. The team knows, right?
Yeah.
So,
And it's also important for the client because before I did this, and we'll talk about that in a little bit as well, my succession plan with LPL, my clients used to ask me, hey, Ken, you know, you're getting older. What's going to happen to us? Are you going to retire? Are you going to leave? What are you going to do? They wanted to know because they put so much faith and trust in me, not only for themselves, but their families. that they wanted to know what that eventuality was. So it was my way of also creating that team aspect, that there was no stone left unturned and they didn't have to worry if something happened to me, right? Either way, that they could still be well handled by Van Leeuwen and Company.
So I know I messaged you that one of the things I was going to ask you is what would you tell your 25-year-old Ken, if with all this wisdom you've got now after all these years of being in the business? And then I went on your website and you have a video for it. So by the way, everybody, that's Ken's famous laugh. Before I even got to become better friends with Ken, he's just a great guy. But anyway, so I want to talk about coaching, mentoring later on, and a little bit more about what you would tell yourself now. But just to talk about one subject in general is about words.
Right.
Now, so far on this podcast, I could see like one of the first things you said was get a mentor that can show you how to do business development, basically, how to sell, right? Because you have to do that no matter what profession you're in, right?
Absolutely.
And we absolutely have to do that in our profession. And that's why the retention rate's so horrible when you're a non-employee advisor. I think it hasn't changed in 30, 40, 50 years. It's still like 15% or less when people try to go and make money on commissions and survive in our industry, right? So, but the sales and marketing part, the use of words. One of my friends in business, coaches that I admire and that we have a joint venture with at our firm, is Duncan McPherson with Pareto, and he's a master of it. So can you talk about that, the importance of words, even like not using financial planning, for example?
Amazing, right? Words are super important, regardless of in any context in your life. It's how you say things to someone, or they say it to you, how you absorb it, right? And this is a pure, simple thing. Like, for example, if I have to cancel a meeting, like let's say I'm out sick, I never will call a client or have one of my team members call a client and saying, Ken is canceling a meeting, right? Canceling to me is a very negative word, is cancel, right? Rescheduling, simple, right, is a much better word. Ken needs to reschedule. It comes off so much softer and more adapt to a person, right? Just like I also said before, Jim, we don't like to call my younger advisors junior advisors. I like to call them associate advisors. Why? Because if I'm Mr. Important Client, do you want to deal me off to a junior? I don't think so, right? I want to be working with one of your associates, right? We also like to call each other partners because we partner in things, A big thing right now, too, is, we do a lot of these, equity indexing strategies now through the various SMA accounts, and we find that super beneficial. But it's the same thing as I was taught when we started marketing leads a couple of years ago. It was, they offer tax benefits, not tax losses. You want to frame it in a word that people understand. Even someone recently told me, Jimmy, that we shouldn't be using financial planning fees, because fee creates a negative word too, that you should do their costs. The cost for this is X rather than fee, because people are more willing to accept costs than fees. Just saying. Kind of interesting how we hear things.
No, I agree with you. And I think that's what's important. So for hopefully some younger advisors that end up listening to this or watching it at some point, all these little nuggets I think are really important. And what's really changed, I think, since when you and I got in this business, Ken, is, the big wirehouses, the insurance companies, they're not hiring a whole bunch of trainees like they did back in the day, right? When that,
No.
like, for example, like The Pursuit of Happiness, the Will Smith movie about being a stockbroker back in those days. That's been like that for a while now. So to me, that entire wirehouse industry, it's funny, I was just at the golf tournament I was sitting with the global head of investment banking for Morgan Stanley. he was talking about some of the big advisors and how much money they manage and how much money they earn, but still kind of they're trading chips back and forth. They're always just kind of paying each other people to move back and forth. And as we've seen this evolution continuing to happen from people that are in those environments, into the more independent world, I think that trend is not going to stop. And so really it's going to be interesting to see, Ken, I think, can the independent firms, RIA firms, aggregators, or other, smaller practices, can they train the advisors like the kind of training we got when we started? So I know LPL's got something for that, which is neat. They've got kind of a university type deal that some of our advisors have gone through. But I think the training on the salesmanship and all these little things are critical in order to communicate well with clients, be able to generate referrals. And as we know, hopefully we can talk about this a little bit, even though I wasn't preparing you for talking about how to grow organically, but obviously you've done a very good job of getting new clients. And I do want to talk about that. What have you found are the most effective ways to grow?
Well, we also are students and participate with Duncan McPherson. Okay, we're in Pareto as well. So one of the things we find super beneficial for Pareto, right, is Duncan and the Pareto team, and our coach happens to be a gentleman by the name of Scott Hamilton, who's phenomenal. But what they basically teach you to do, they teach you to talk to your clients in terms of what are you looking for, okay? Because your best clients come from referrals, right? So it's our goal is to basically talk to our clients about what kind of clients are we looking for. For example, I happen to be looking for a new client that has a minimum net worth of $10 million, right? Because again, I want to make sure that I'm only focusing my time and energy on one certain type of individual, right? My associate advisors look at people of different levels. So that's actually but then you got to talk to clients about it, right? You also have to teach clients how to talk about you, because folks who are listening to this, you'd be surprised how your clients don't really know how to talk about what you do for them, right? The default in our world, right, is, oh, he manages my money, or he's a good guy, or this. But you really want people to know the full encompassing scope of everything we're doing for the clients, right? Like, oh, they helped me with my estate plan, or they constructed a program, to help send my grandkids to college, or, they're instrumental in creating a giving plan for my favorite charity. So, I mean, that's what we're in the process of doing now, right? So we're constantly talking to our clients too. We're finishing a round that, Pareto, Duncan, Scott have suggested, and it's called the voice of the client. So we're asking the clients to describe us to us. And, when we're working with a husband and wife, each individualized, not a together answer. And we want them to tell us what they value about us and how can we make that better. That's what we're also saying to them. Hey, look, we know you're we've worked a long time together, but what can we do better? Like, clients want input. What can we do better? Is there something we're missing out on? So clients, for example, want to know that. And then we want to ask them, when you talk to your family or your friends, how do you say to us, what do you say about us? Because we want to construct with them how to talk about us, because that's the most powerful thing. And when to talk about us. Because again, Jimmy, the modern time is, right, we were trained, or we were told, basically, you're meeting with your client, get his Rolodex and start calling all his people in his Rolodex, right? That wasn't super effective either, right? So what we want to do is have people talk about you, in a really when the time comes right, when it's essential. And, it's been working actually really well to do that for us. So that's a great, Pareto. I would encourage that for everyone here.
I mean, you've had, but Ken, I know you've also done strategic coach, but you've had coaches and mentors in that way for your business and life for a long time, haven't you?
I have, Jim, because you want to know something. I sought them out, right? I mean, and it didn't have to be a person who's older. It just had to be someone whom I respected and wanted to learn from. See, I'm very big on learning from other people. I love to listen to people and I love to listen to what they have to say. And then I try, what can I incorporate into my life that they could help me with? And then I try to develop a relationship with some of these folks, right? So that I can, hey, do you mind if I call you when something arises in that area? And you want to know something? 99.9% of people go, of course. So I think that is really, really important, that mentoring, that sharing. And then also, frankly, I believe that we as, more experienced advisors, frankly, have to give back to that younger generation as well. I mean, and not necessarily for profit all the time.
Yeah, one of the things that gives me energy is actually talking to an advisor that wants to learn from me, right? Like, I don't care what their production is. They could be doing 200,000, 100,000 a year, and they're younger and not as experienced, and they're not the know-it-alls, right? And so they were hungry for help and for mentorship, and so it's interesting. That really gives me a lot of energy to be able to help somebody like that. And I think a good lesson to learn for everybody is that very successful people, I think the best of the best, want to help people, no matter who they are. So
Well, yeah, and we've all heard that if you want to get better at something, teach it to somebody else, right? We've heard these things, and the point is now do it. But also, people also will help if you ask them for it, and you're respectful of them for it, But there's a lot of great wisdom out in this world, and I think sometimes some of us don't look to seek that wisdom, and I think that's a mistake.
can we go back a little bit, because I think this idea of charging for advice and for helping somebody create their life vision is interesting. Can you describe how you do that with people? Like, what do you say?
I basically, because let's say you get referred to someone,
Yep.
and then we talk to, we always start with um, totally, what's the conversation? Why are you here? How can we help? Blah, blah, blah. This conversation is the first meeting. It's about you and us, seeing if we have a chemistry to work together. I'm trying to determine if you like me and I like you, frankly. And that's what we look at. And then I always, I say, I want to, like, how do we get paid? And I said, we get paid for doing financial plan. We want to be your advisor. We use the words, I want to be your family's CFO. And most people, because again, we work a lot with corporate executives, people can relate to what's a CFO. And I always make sure to say, you are the CEO of your family. So you are the CEOs of the Smith family. And I'm looking to apply to be CFO. And I said, we charge in three, financial planning fees. It can be either $6,000, $9,000, or $15,000 a year. And that's on an annual basis. And that's how we get paid. And most clients then, most prospects at that time go, oh, okay, fine. And then we go to the second meeting, and then we actually come back and we say, this is what we can do for you, and this is what we'll charge you. And I make perfectly clear, like, if you want to work with me, Ken Van Leeuwen, I'm at that top end of that range. I'm that $15,000 guy. But I got $6,000 advisors, like we talked about, and I got the $9,000 advisors too. So again, you want experience, you can hire Ken, but you got to pay for it. So we're very much focused on that.
I love that. I think that's. I'm glad I asked you that question, because I think listening to somebody like you explain how you say it to people makes a lot of sense to me. And then also, I think for advisors that are trying to do this, there's a difference between what clients are more attracted to paying a fee for, or a cost, I guess, for service for planning. In the corporate executives, a lot of them, they may not be as quite liquid yet because they might have a lot of wealth tied up in their company stock or in their retirement plans, right? But they make a lot of income. And so they can afford to pay a little bit more for that versus having it come out of an investment account, like a retiree that's got a couple $1,000,000 and they don't spend a whole lot of money, might look at a large fee differently. That's been my experience. And so knowing who your clients are and who you're trying to target, I guess I did know that you worked with a lot of corporate executives. Was that on purpose? Is that part of like where you lived, or why you wanted to be known like within companies to get referred to other people? So talk about that a little.
Well, we started specializing in working with corporate executive because those were the people I enjoyed working with personally. And why do I do that? A, we work with a certain level of corporate exec, right? That's usually heavily compensated, in various stock plans. They make very good livings, of course, salary, and they get paid usually a very nice bonus on an annual basis. But their real planning opportunities were in the kinds of stock they had, whether it was stock options, whether they were non-qualified or incentive stock options, different restricted stock, performance grants, combining that with deferred comp. There were a lot of issues there, right? And you not only had to be planning oriented, but you had to be tax savvy too, because there was a lot of tax considerations around those types of compensation, right? And then with a corporate exec, why do I like working with them? Because a corporate executive that does very well in terms of their positions in companies and as they rise up, they're very busy people. They travel a great deal usually for work. Time is a premium to them. So their ideal thing is not to be analyzing mutual funds on a Saturday afternoon, right? They'd rather be doing something to, not think about work and not think about the grind and things like that. So what did that mean? They were great delegators, right? They were great delegators. They wanted someone they thought they could trust to say, okay, you're the people in the team that's going to help me do that. And that's the people that we look for, right? Who are great delegators and who understood the value of, having a team approach. They also were very in tune to, they're not the kind of people who call you every day worrying about the market, right? They're usually worrying about their business that they're involved in day to day, right? They don't have time. They're not watching necessarily CNBC or these different things. They're focused on their business and running their business as effectively as possible because that's where they know their upside and frankly what's required about them. Also, they tend to be very planning oriented because in their careers, in their jobs, they have to be planning oriented. They're very adhere to a plan in terms of what they've got to execute on for their division, their position, their company, etc. So they're really excellent that way.
Makes a lot of sense. I mean, I think for people that are listening, Ken's obviously had started out with a background in planning, but then think about the type of clients that would be well suited to want to pay for that service, right? And need that service. And so it makes perfect sense to me. And then obviously you became, I'm assuming, specialized in understanding how executive compensation plans work, like you just said. And you and your team are, not every advisor that has big clients understand all that stuff.
And what's also important, Jim, is that executives and people in higher positions are very in tune to advisors that just want to sell their stock anytime they can get a hold of stock to sell and raise money to manage, right? That's not how we look at it. because I'm always looking to put that tax angle into it too. Like, I'd rather generate money from you from a long-term capital gain than a short-term capital gain where it's taxed at the highest, right? So I sometimes want to hold your stock. And if you work for a good company, and as we all know, listening to this, there are lots of good companies. So you can hold stock and, keep compounding the effect of that. Like Warren Buffett actually once advised, I was reading a book, like corporate executives shouldn't exercise their options till, usually it's a 10-year vesting period, till the end of that 10-year vesting period, just to keep the tax man as far away from you as possible. And if you work for a great company and you don't have any other cash needs. But that's why we do it too, because you can be really smart and people appreciate it, and they can see through a sales push, right? That's the one thing we believe too, is that affluent individuals can see through a sales push. So uh, they don't want to be that. They like to know that you're sitting on that table advising them.
So Ken, when did you start thinking about succession for you and your business in terms of the monetary side? And we can I know that this is a big subject today for a lot of advisors. To me, it's one of the big issues that us advisors have to deal with. Well, for a lot of advisors, their business is the most valuable asset in their balance sheet. A lot of advisors don't think of it that way. Um, I don't think a lot of us have done amazing planning around that subject, and a lot of times the valuations have gotten to a point where taking the kind of risk with the largest asset that you have on your balance sheet, meaning like financing it. I always thought, Ken, that I would just have the generation two people buy my practice someday and self finance it. And then when it gets to a point where we're talking about the numbers that we are, first of all, in my world, I'm not even sure if they could pull that off financially. And then
Totally.
secondly, without me being a major bank for them to do that, I'm not sure I'd be willing to take the risk. So I think that's, we've seen a lot happen with private equity in our industry and all of this. I know you decided to pick with use LPL. I don't need to go talk about that, but in terms of succession, can you talk about the importance of it and what that looks like? And it sounds like I never asked you, but it sounds like you're going to be continuing to do what you're doing for a while.
Well, Jimmy, as I like to say, I love what I do most days. So, you know, yeah, I really love this business. I love my clients. I love new clients. I love the hunt. I love the markets and everything that it gets thrown at us. I even love all the different presidential administrations that we have to deal with and how everything's so different. And the world events. That's the great thing about our job. Every day is new and different, right? So that's really cool. Um, Secondly, I think that you asked me a question. When did I start thinking about succession planning? Right. I had it's a sad story, and some people who are listening to me that might know this individual. I had a very good friend, an advisor at LPL, um, who he was in picture perfect health. He was 1 year younger than me, um, and he died of a massive heart attack. Gone like that. Um, and of course, I went to his funeral and I walked past his coffin. And I won't say I saw myself because I was totally grieving for him and his family. He has a wonderful family. But I was like, holy moly, that I don't want that to be me for a lot of perspectives. But things weren't tidy in my mind, right? At LPL, they have a program where
Insurance plan.
the assurance plan. But then I thought, that's not basically going to get the most for my family, and it's not necessarily going to get for my team also, because while my team never said to me, they never, but you know, did they ever think, hey, Ken could not come in one day, and what does that leave us?
Right. Right.
Um, so, and I care very deeply about all those constituencies, plus the clients, right? Like, they needed a track to run on. My team needed a track to run on. My family needed a track to have. So that's why I looked to succession and formalizing it for sure.
That's great. I think I know who you're talking about in the past, but anyway, I think it's a big important thing for a lot of people to think about as advisors, because we're all of us, or a lot of us, excuse me, the majority of advisors of the age that they can see, that part of their career in front of them. So even if there's someone like yourself or me that wants to continue to work for a long time, it doesn't mean that the monetization is very different than retirement, right? Or succession. I think a lot of advisors think of that differently. And so they think, if I sell my business, that means what am I going to do? And I'm like, well, you don't have to do anything different. You just keep doing what you're doing,
Yeah.
and just take, the business side of things, and look at that differently. So thanks for sharing. I think it's important, though, for advisors to pay attention to this. There's lots of opportunities. LPL, other firms like LPL, if you're with another broker dealer, a lot of them have plans for this now that they didn't have just a few years ago.
Sure.
You got a lot of different firms that are trying to buy advisors and stuff like that. So there's a lot more choice, I think, than there were available not even just 5 years ago. So the opportunity for advisors to have more choice in what that looks like, I think, is important. So that's good. And then, I know I saw on your website, but in terms of lessons, like we didn't talk about some of the other things that you would tell the younger version of yourself from a business perspective. And feel free to talk about life things that you've learned too. Let's hear about a little bit of the things that the wiser Ken would tell the younger Ken.
Um, the wiser Ken would tell the younger Ken, don't be afraid to ask for things. Like, you know, ask clients to do business. Don't wait for them to ask you. Um, Also, I think what's important is that don't get discouraged when you're having a tough day, a tough week, a tough month, a tough year. This is a really wonderful business, and our clients really, the people we work with, really do appreciate us. And the other thing is, get to know clients as well as you possibly can and as well as they will let you. Like, I hear some of my colleagues talk about that they have annual review meetings. And my thing is, man, I try to get together with my clients, from a business perspective, at least 4 times a year. And then I like to do social things with them as well, right? Whether it's going out to dinner with couples, whether it's playing golf, whether it's going to a ball game. I mean, whatever they want to do, I'm into it too. And I think that that's super important, is to make sure they start to see you on a different level, right? Because now they see you more of as a paid professional, but as their friend. And I think that's really important. That's something that I would suggest to do. And again, people would say, well, is that time effective? Maybe not short term, but long term, I think it's very effective.
Plus, I think if you're doing that with a lot of the best clients, I'm sure that you develop friendships with people that you like. That's probably one of the reasons why you get more referrals in than other people might. I just know that there's absolutely, if there's one thing that's a return on resources in my career, is that the more time I spend with the right people, the more business comes out of it. It could be referrals or more business with that same family or whatever it is, right? So that's what I'm hearing. So
Yeah,
instead of at more meetings or as meetings and more work to do, those are opportunities, right? Especially if you can focus on the right types of people.
yeah. And I mean, look at it as an honor when you're invited or told to come to their funeral, or in the Jewish religion when they call it to pay a shiva call. Um, Look to do, or you're invited to their daughter's wedding or whatever. Go to those events. I mean, that's a really high honor. Make sure you connect like that. I think that's really important, right? Is to make sure that you're connecting with them on that personal level, because then they're also they connect with you too, because other people will ask them like, "Oh, who was that? Is that no? That's my financial advisor." Your financial advisor, so it creates this whole kind of framework and gets other people thinking and talking. And then it also, Jimmy, what's important, and this is a Pareto thing, right, is that it also gets people thinking, well, my advisor wouldn't do that, or he doesn't do that, or you know what, you have a guy who came to your father's funeral. I mean, those are all different things, right? That people want to know and they value, right? So,
A couple other subjects I wanted to talk about before we close out. One is, I know that you and I both believe that having the right type of portfolio for the right type of clients is important. But once you get there, I don't think you and I try to compete with our investment portfolio as the value add, right? That's to me, it's a commodity. Once you're dealing with great people that are good investment professionals, that's not the place to compete, right? It's
well,
everything else.
yeah, I mean, I think, as we all know, portfolio success, even for top managers, except or even a very few, can be fleeting. So I think the issue is that what you just have to do is build portfolios that are going to get clients to their goals, um, whatever they may be, however you do it, right? And always have them in mind. Like, do they like volatility? Do they like, a lot of people are very concerned about fees, as am I, built into portfolios, right? So, how can we minimize those fees? I mean, again, I want to get on their side of the fence and think of it through their head. And I think about it for my own money, my own head, right? Like, how can I do the best for them and minimize costs, create tax efficiencies, all kinds of different things. So that's my point is, advisors should also act like clients and think like a client acts, or they should act, right? So I think we don't, because we sometimes want to be the smartest guy in the room. At one time at our advisory council meeting, the client said to us once, and this was a very, astute, big time lawyer, um, ran a major law firm or a branch of a major law firm. Said, I don't care about my results. I know they're going to be good. I hired you because I know you're smart, but now I want you to care for me and my family.
That's awesome. That's awesome. So you've talked a lot about what makes your, I think, business stand out. So to me, I hear a lot of things that you know resonate with me, such as I think you spent a lot of time in your unique ability, which I know you said today. Now it's more about business development and setting the vision and strategy than building your team around you for handling all the other stuff, right? You absolutely have professional contrasts. You don't look like the other advisors out there, Ken, meaning not physically, but the way you market your services, right? I think the Rembrandt Society concept, I know what you're doing with that is a really cool way. And so I know words are important to you and how to differentiate. You and I have both done a lot of media in the past. Ken's been on CNBC, on Squawk Box, and lots of stuff.
Yeah.
To me, I think it's good for clients to see that we're credible, right? That tier one, but it's not tier one news agencies would be looking at us for that kind of a thing. But maybe it helps us with referrals. But I know we're not doing it trying to generate leads necessarily. But that actually, I do a lot of it still. I've been doing it consistently. But I think it's for me, it was more about building credibility with clients in the industry and that kind of a deal. And maybe it does make us more referable, I think, right?
Well, Jimmy, and you're really good at this. Kudos to you, sir. Um, it builds credibility with your clients, right? And it also helps you because you have to sit there under the spotlight for X amount of time that you're going to be on, and you got to sound professional and affable and comfortable and professional, right? And I think that's good training for every advisor, right? Is that you got to be you when you're talking to people, right?
Yeah.
Because people are buying you. You're not. I'm not going to be Warren Buffett. That's not Ken Van Leeuwen's MO, right? but I'm going to be Ken Van Leeuwen, and I think you do that great. I mean, you have a great image that you project on television.
Well, appreciate that. And I was going to say, I think the last thing I was going to mention is just to focus on what I've heard from you, and I know this just because I'm friends with you, on relationships. So I'm sure that resonates not just with clients, but with your team, people that work for you, the people that you partner with, and little things about not calling somebody a junior advisor or whatever. Those are all things that I resonate with too. We try to call our employees team members, and I think it matters. Those little things matter to people because we're in a people business. We didn't get to the subject of like AI. I think that's something that we're all trying to figure out. How to implement and what that's going to look like. But with the implementation of AI, I don't think that we're going to be out of this business. So I know from my perspective, getting more talent and younger people into this industry is going to be a challenge. I think, if you look at all the statistics from all the people that do this stuff, we're going to be short lots of financial advisors. And I don't think people that have real money are going to want to use robots. I really don't. Information's been free a long time. So anything to talk about that, how you see the future of this industry shaping out. I always encourage, my friends' kids to get in this business. I think the life of a financial advisor can be so wonderful. We have the ability to create a lot of time freedom, but also do a lot of social good, right? So any final thoughts on what you see with AI or this industry and how things might evolve?
I think how AI is going to be very helpful in our practices, right? And we just happen as LPL advisors, we use Jump AI, just in summarizing a conversation and getting back an email within a day to a client. I mean, that's revolutionary in terms of notes, right? Just simple. I believe that AI is also going to take us to a place in terms of filling out paperwork and doing kinds of administrative tasks like that. Like, it's going to know when we're having a conversation, Jimmy, and you and I agree that you're going to invest some money. And then, frankly, within 10 minutes after that discussion, there's going to be a new account form with your name and all your data, and it's going to be ready to go. Right. So I think that that's what we see coming down the road. I don't necessarily know how it's going to impact portfolios. Are machines going to stock pick for us? I'm not sure about that, to tell you the truth. I just think it's going to help us be more efficient. But the most important thing that I can, again, offer to advisors and professionals listening to this, give it a chance. Let it see how you can incorporate it into your business. Don't automatically say, yeah, that's good, no, that's not good. Given the possibilities, keep your options open. Don't close yourself down to it, because we could be on the age of a revolutionary change in our business. But there's still, as you say, Jimmy, and I totally agree, there's still going to be those people that have to be that wisdom and that personal caring, right?
Yeah.
Because that robot isn't going to know about Mrs. Smith's two grandchildren right now who go to Yale in terms of how to handle that, right? They're not going to understand that. Or the desire from, like, one of my clients was, she wanted to make sure her children, her kids were inheriting a bunch of money, but she wanted them to enjoy it now. So we developed a program where she was able to give them hundreds of $1,000s on an annual basis and never have to worry about her own needs. So that was very powerful, right? Because that makes this lady feel great, and that's an emotion I don't think a robot or an AI program can replicate.
Yeah, it's fascinating. I use ChatGPT, but I bet you if you feed all that information in, it could tell you what to do. But I just don't think people can execute on their own. And so, think about investing, right, Ken? It's not that it's rocket science on how to do it, but doing it's not easy. So, as Nick Murray says, who I'm a big fan of, we're fighting human nature with everything when it comes to money. And so,
Absolutely.
as long as there's humans, there's gonna be issues. So, hey, listen, that's wonderful. We're almost at a full hour. I really, really, really appreciate you doing this. As I said when I started out, this was only the second advisor We're going to try to do more content that's advisor focused like this from other successful advisors. As you and I and all of our colleagues always say, is we get the most out of learning from each other, especially if you're willing to share. So Ken's a person I know that's always willing to share. So if you're, in this area or something, you can look him up, Van Leeuwen and Company. He's a great guy. And thank you so much. Appreciate it, Ken.
You got it, Jimmy, and thank you. Thanks for the opportunity, and it's an honor to have been with you.
Hers and his, Three's Company too. Come and dance on our floor. Take a step that is new.